Virgin Galactic stock down large, 11%, even after a successful first commercial spaceflight. This is Intrendias. Welcome to the channel. We are reviewing Virgin Galactic SPCE space stock today. In my previous video, my conclusion was to essentially stay away from the stock for now, as the market is getting very volatile, prices are increasing, interest rates are rising, etc., etc. And we could revisit that video right now. Perhaps this would not be the time to consider adding to space. There's too many unknown factors here. With more capital funding or raising and future Fed rate hikes, it may just be a stock to pass on and continue down the aisle. The new Delta class ship that's in development, here we are seeing great improvements, such as the Delta class is able to carry 6 seats instead of the current 4, and the current ship is able to fly once per month, while the Delta class is expected to fly once per week. So this is great news for Virgin Galactic, as the revenue rotation is much faster and more frequent. This Delta class, each seat will cost $450K, which results in $2.7 million in revenue. So therefore, with a cost of $50 million to $60 million, the break-even point is around 6 months, where we have 4 weeks times 6 months times 2.7 million is equal to 64.8 million. Now that we know a little bit more about the Delta class, let's go look at the Q1 2023 balance sheet. Essentially, what we're seeing here in the financial highlights is that there's $874 million in their cash position, and the operating activities equaled a cost of $136 million, which is a huge increase compared to the $66 million in the first quarter of 2022. So we have rising costs, and this $136 million equates to $544 million by the end of 2023. Because that $136 million cost was only for Q1. So times that by 4. Obviously, that does not leave Virgin Galactic with a lot of wiggle room to make this work. If the Delta class was perhaps ready by a year and a half from now, the outlook may be just a tad more in Virgin Galactic's favor, but 847 million compared to 544, that's going to give them only a year and a half. So with that being said, I would not be surprised to see further dilutions in the stock as they try to fund more cash and marketable securities, aka the stock. Now, depending on how much stock Virgin Galactic internally holds, if the price of Virgin Galactic is able to increase, that may be not only beneficial to the shareholders because it's obviously increasing, but that increase for Virgin Galactic held stock would also increase, and thus their cash position would also. However, I would still not be surprised again of potential stock diluting. Let's go to the candlestick chart and see what's happening. Essentially, what's happening is in the short term, we could see some more bearish moves to the downside. I'm going to highlight 2. bearish candle patterns. First, in June 21st, we are seeing a tweezer top pattern along with a bearish engulfing on the day of recording, June 29th. So with that being said, I would not be surprised of further bearish moves to the downside, potentially hitting back at this $3.18 support level. We're seeing this support level act around 3 times now. And with these two bearish candle patterns, there may be more unfortunate moves to the downside. Essentially, Intrendias still considers space a short-term no-go. However, in the long term, if you truly believe in space tourism, which Intrendias here, I believe in space tourism. It's kind of like 100 years ago when people back then said, "Oh, we'd never fly. That's insane." Well, now people take a flight on holiday. Everyone's taking flights now. It's all commonplace. For long-term sake, if you want to own a piece of history and be part of that space race, then perhaps there's something encouraging behind that. I did have a comment on my first Virgin Galactic video, and I appreciate that person's comment. I love that perhaps one day we'll have a very engaging comment section, flipping ideas to each other. But I didn't cover the scheduling of the flight, mainly because I had a more macro focus in my first video, and I had a suspicion that perhaps much of this is already priced in, right? Think about the Apple phone, right? Just because a new Apple phone comes out every year doesn't really necessarily mean, oh, the stock price must be going up because this is good news. Here's another iPhone. They're going to make more money off of this new iPhone, etc., etc. And perhaps this is what we're seeing with Virgin Galactic, where we are seeing some profit taking off a good day because after 10 years or so of R&D, however long they've been doing this, perhaps the market is now, okay, yeah, we expect you to be successful. You're cash burning 544 million this year. We are pricing in that you will be successful. Much of the increase in the stock price was perhaps retail excitement, which is very valid excitement. This is good news for space tourism as a sector, as a new emerging industry as a whole. And perhaps one day investors in SPCE will find further good news. However, at Intrendias, in this video, this seems to still be a sell slash don't get in, as we are seeing bearish candlestick patterns for the short term. In the 3-year term, Virgin Galactic will be undergoing a very heavy financial burden, burning through 544 million, only having 847 in cash. And where are they going to get more cash? Perhaps diluting the shares. But in 2026, when we do see Delta class proving itself that it can indeed generate revenue and potentially profit, here at Intrendias we'll be very interested to track the stock. We'll still cover the stock, of course, as we go into 2026. This has been Intrendias. Thank you for watching. I hope you enjoyed what you saw in this episode. Hit the like, comment down below what you think about space, and I will see you in the next one.